Obviously, another popular topic of concern for many of my clients so far, since before Christmas really, has been the new tax bill that was passed by Congress, signed by President Trump. And in the beginning, there was really a lot of confusion as to what should we do, what can we do, what can't we do. So I just wanted to clear up a few things for your planning for 2018. The first thing is the government was talking about a 20% income tax rate for pass-through entities. That didn't happen. The only type of entity that got a lower 21% tax rate is the C corporation. Many remaining companies will be able to write off, and these are pass-throughs, LLCs, partnerships, S corporations, companies like that will be able to write off 20% of their net income, but that starts to phase out at about $315,000 of income. And that also excludes some professions, which includes accountants, lawyers, and a few others. The next thing is all of the tax brackets for personal tax rates were lowered. The minimum tax rate is 10% still, and now the maximum rate is 37%. And a lot of the rates in between were lowered and expanded. And by that I mean a lot more income will now fall into those lower tax rates. So that should help a lot of the middle and lower income individuals. On top of the doubled child tax credit and the doubled standard deduction, almost doubled anyway. It was $6,350 for individuals, $12,700 for married filing joint. That was almost doubled to $12,000 and $24,000 respectively. On the flip side, they capped the income and real estate tax deduction at $10,000 total, which is why a lot of people were trying to pay some of the taxes before the end of 2017 for 2018. And that basically on the federal level is allowed if the taxes were basically charged and paid before the end of the year. A lot of towns, counties were scrambling to get this done for the residents. Some were able, some were not. It really depends on your city and state. And on top of that, New Jersey is clarifying what will happen on your state tax return if you paid ahead of time. They're working on clarifying now. It seems like you'll be able to deduct 2017 and 2017 and 2018 and 2018 on the state tax return as long as it was paid before the end of the respective year. Other than that, there was some other minor adjustments, but I believe I've covered everything that's major. And obviously, if there's any concerns or confusion, you could find me on my Facebook site, facebook.com/AKCPA. Send me any questions, and I'd be happy to answer any concerns that you have.